Girish Nadkarni joins us, Head of Equities with Avendus Capital. Girish Nadkarni, good morning. Thank you for joining us. Characterize the market environment for us, Girish. Suddenly, global growth scare is back. Earnings are looking toppy, and global liquidity is threatening to move out.
Actually, the short-term indicators, there is definitely pressure on the markets. I think there are a lot of short-term concerns. Events like issues like GAR or mixed corporate results. All these things will tend to put pressure on the markets. But I think there is a silver lining in all this. I think the fact that the RBI had cut repo rates by 50 basis points and the fact that it is now slowly getting transmitted. Our belief is that the inflation numbers that one saw last month, we will continue to see a decline in inflation rates largely because of the base effect of last year, and the numbers that will keep coming for the next 6 months at least will show that inflation has kind of tapered down, which will again put pressure on interest rates to come down, which is good for the the industrial sector and the markets as a whole. So I think while the markets certainly are at or below the technical support levels, which is why they can come down in the short term by about 4-5%, we would look at accumulating at those levels, because I think the medium term with interest rates going down, I think the outlook is quite bright.
So what are you advising your clients, Girish, that it's time to sell in month of May and go away?
It is possible that the markets will be quite weak in the month of May, but I think towards the end of June or July onwards, I think one will see a recovery in the markets. From what levels is a difficult question, but I think there are certain there are certain things which will happen going forward. One is, as I said, interest rates will come down. Two is that because of the current account deficit and the fiscal deficit, there will be continuous pressure on the rupee. So there are very clear sectors that one can play, and basically the sectors which are linked to exports. So IT will continue despite a mixed results from the industry leaders. IT will continue to be a reasonably good year, largely because of the falling rupee. Pharma company exports will continue to be profitable, and you'll see some upsides there. So I think export-led growth will be one area to watch out for. The other is the interest sensitive. I think banks can be played from a medium-term perspective. I think banks which have been beaten down quite significantly, mostly the PSU banks, can be a good bet to play.
Girish, hi, morning. How are you approaching the telecom basket, given the reaction that we saw on some of these telecom names after the TRAI recommendations yesterday?
There are certain sectors like telecom and infrastructure which are critically dependent on government policy, and at the moment there is a very large uncertainty on all government policies, and therefore the fact that spectrum is being auctioned at such high rates will put pressure on some of the stocks, especially the people who've lost their licenses and have to bid again. So I think it's best to avoid sectors like telecom in the short term, telecom and infrastructure, despite they being infrastructure being an obvious beneficiary of falling interest rates. I think until policy actions are clear, one can stay away from them.
Girish, there is a reason why consumer stocks are trading at such lofty premium or at such strong P multiples. But do you think in the near term consumer stocks will continue to trade at stretched P multiples? Nestle is 40 times based on FI 13 estimates, HUL is something like 30 times, and ITC something like 29 times.
I think consumer stocks will continue to remain outperformers. I don't know whether they will, outperform the market from this level onwards. But in a falling market, certainly they act as, strong counter, they're counter-cyclical in that sense. And therefore, remaining invested in these stocks will be good. I think the results for this quarter for consumer stocks will continue to be as market expected or better. I think demand for consumer stocks, demand for consumer items will increase because of the money supply, and therefore I think consumer is a good safe bet to stay invested in this market.
What are your thoughts on global commodities or companies or group of stocks which are exposed to global demand scenario setup?
Well, I'm not an expert on global commodity prices, and they tend to kind of move up and down with global liquidity and many other factors other than the Indian economy led factors. But some of them, all I can say is that some of them are very close to their lows, all-time lows, and people with a strong heart can take bets on those commodities. But at the moment, I think there are much better fundamental sectors in the economy which one can play very safely. As I said, all interest rate sensitives, all export-led companies, consumer stocks, I think which is a good fundamental place to be in right now.
Girish, how would you approach autos, considering most of these stocks are looking strong, and not just that, they continue to deliver on a fundamental ground as well, be it an M&M, be it a Maruti, and of course the high flyer Tata Motors?
So demand for commercial vehicles continues to be very strong. Demand for tractors also continues to be very strong. I think with enough purchasing power percolating down the economy, demand for four-wheelers will continue to remain strong stocks. Therefore, they will do good. Also, the fact that interest rates will come down will mean that that will benefit demand for both two-wheelers and four-wheelers. We are more bullish on four-wheelers at the moment. And therefore, both demand-led and interest rate-led push will help these companies to be good.
You're bullish on the four-wheelers because four-wheeler is one space where there is intense price competition, too many product launches, and some of the non-listed four-wheeler companies, they don't care about protecting their margins in the near term.
Our research has indicated that Ashok Leyland amongst the stocks is a good one to play for in the short term, in the medium term, because I think there are structural factors there which will help improve margins and improve the volume of sales. So Ashok Leyland is a good stock to play. Tata Motors is of course dependent on global demand for the passenger vehicles because of JLR. Which at the moment is very good, but it is not purely impacted by CV sales. So with a strong CV sales growth in India, and I think Ashok Leyland is a stock that our research is recommending to play.
Girish, so if you are bullish on CV sales is a proxy to an economy. So if you are bullish on CV sales, which means you are bullish on economy. But if you are bullish on the Indian economy, why are you bearish on infrastructure?
Well, as I said, CV business is an established business. It is less impacted by policy action. I am bullish, as I said, when interest rates do come down over a period of time, and which we expect for the next 1 year. Despite the RBI sounding a little cautious on interest rates, we do expect interest rates to come down because of falling inflation over the remaining part of the year, and that's probably a contrarian call to the market. Therefore, we are positive on the economy. But infrastructure stocks, there are structural issues in terms of acquisition of land, mining licenses, lot of things which are not just dependent on demand and on interest rates. And therefore, till that thing is clear, it's best to kind of wait and watch on those stocks.
Girish, finally, your views on Coal India after completely ranged last year. Now that the penalty has come in lower than what was expected, does it make for a relook?
Coal India is what you mentioned?
That's right.
Yeah, I think Coal India is, it has, at the current levels, it looks a reasonable bet. I think the fact that there were some concerns with respect to the import of coal and supplying it and the penalties of 90% and 80%. I think since that overhang is over, I think Coal India from the current levels can be a good bet. But again, I don't think it's a very strong bet. As I said, sectorally there are other sectors to play, because Coal India again is also dependent on policy action.
Girish, I appreciate your time and thank you for your insights.